You have no idea what we have done to get a panel up here, and a panel of this caliber. So we've had some last minute changes, but I'm so excited about the brilliant group of investors we have on the stage now. So I'm Florence Bhavanandan. I'm head of platform and operations at Launch Africa Ventures. I'm going to give a very brief intro. We're a Pan-African early stage fund. We have 2 funds, 160 investments across 25 different countries. And I'm going to hand over to Angelique from Blue Earth Capital to give us a very brief intro of hers, and then we'll go down the line.
Pleasure to be here. Blue Earth Capital is a commercially minded impact investor with 1.5 billion AUM. We invest along 3 investment strategies. I sit in the funds team where we do primaries, so funds, secondaries, both GP-led and LP-led, and co-investments. We are investing across the continent.
Thank you, Florence. My name is Zainab Al-Sharif, partner at Plus VC. We're a VC fund that invests in early stage startups, pre-seed to pre-A, sweet spots being seed stage, MENA focused, sector agnostic as long as it's backed by tech or tech enabled. And I'm heading the investment side of things.
My name is Hussam, so is this thing working? So my name is Hussam. I'm a partner in a growth capital, private capital firm called AFSIC Partners. What we do is we're a single sector investor. We only invest in tech-enabled financial services or fintech, focusing on the growth capital stage. So we come after venture. Our average check size is in the zone of $40 to $80 million. We back basically entrepreneurs and founders in expanding across geographies. And we are not Africa exclusive. We're more global in nature. Our first 2 funds were mainly growth markets, doing Africa, South and Southeast Asia. And our 3rd fund now is also doing a developed market angle. So we have Europe plus growth markets.
Brilliant. Frank.
Hi, I'm Frank McCosker. I'm the managing partner of Africa Bridge Fund. We're a new fund. We're a sister fund to Atlantic Bridge Ventures, which is a platform that has been investing across Europe to the Valley and Valley to Europe, and we're extending that bridge to Africa. We're looking at climate, health, and enablement technologies, and we're doing Series A and B and ticket sizes of 5 to 8 million.
Brilliant. So this panel is all about accelerating growth across Africa, and ultimately the people who are going to do it are the founders or the GPs that we invest in. So Zainab, we're going to start with you. What are the real characteristics of a founder in their company that you're looking for that gives you the belief that they will be that person in that company to scale and grow?
That's a good question because we actually invest early stage, so most of the time the rationale is actually the team. So we do a lot of observations throughout our due diligence. So to start off with, I'd like to break it down and look at it as the 3 C's. First of all, let's look at it as curiosity. So you want to invest in a founder that's curious, that asks the right questions. And with curiosity comes a diverse team. You need to have a diverse team with different mindsets, different skill sets, so that you can brainstorm and ask the right questions. What I mean by the right questions is you don't want to expand into another market that has a completely different problem than what you're solving in your existing market. So understand the problem in the different markets before approaching it. Speak to multiple people. Speak to all stakeholders, even if it's founders from the same sector, from the same, or founders that are operating in your current local market that have expanded into these markets. Ask them all the right questions. Ask yourself, is it realistic or not to move onto this market? And if all the answers tick those boxes, then the second C comes into play, which is connections and communication. You need to have the right connections, speak to the right stakeholders, other investors, speak to your investors as well if they have invested in portfolio companies in these markets, what was their experience, have connections with the government, see what's the regulatory landscape, basically having connection and communicating with all stakeholders. And then the final C, which is capital, managing your capital management. So how are you going to allocate these funds to expand in these markets? Does the unit economics make sense for you to do it? You don't want to burn out and overwhelm your team at the same time and take them into a market that you don't even understand. So using your capital efficient enough for you to expand into those markets.
Interesting. And Frank, what about you?
Yeah, so when I'm meeting with a new founder or a new investment, I've got 3 questions that are going through my head. They're why this? why now and why you? And they sort of culminate, and it's not my questions, it's a friend of mine who started 2 or 3 large corporations, Francis D'Souza at Illumina, and he came up with these questions, and they really resonate to help. So we think about, is this big enough? That's pretty easy. We're sort of going to fix the world. We're going to go for it. But the second one is like, why now? Is this the right time for this tech to hit the market? Is this the right time for the tech that we're investing in to get right product market fit going forward? And then why are you uniquely qualified to do that? And that's kind of how we look at it from a founder point of view. And obviously there's passion and all the things that Zeynep's saying as well, but that's our 3 kind of core questions.
Difficult one, quantifying the intangibles around the founder, especially at the early stage. Angelique, you are investing in a different kind of founder, GPs. Tell us a little bit more about how you select those GPs.
I think it depends very much on what, how we invest. Is it like a primary? Are we going into a blind pool? Obviously, then we're looking at track record, not only in the sector, but also the size that they're targeting in terms of their investment strategy, track record in terms of value creation, like what they want to do, have they done that before, can they do it? If we look at co-investments with that GP, we will also very much look at the management team, and then all these questions come back into it. You're asking not just how long have you been doing that, and how have you been doing it well, but what do you need to start doing, stop doing, and do differently? What keeps you awake at night? And really understanding management concerns. And then when it comes to secondaries, if we do, for example, an LP-led secondary, so we're replacing an existing investor, we come in and have the chance to look at a fully invested fund usually. So we look at the GP still, but also can do our full due diligence on the existing investments. Yeah.
And now we'll move to one of your GPs. Awesome.
I hope we're taking the boxes.
Yeah, exactly. Awesome. So the founders that you've selected, there are certain things that they all need in order to scale their businesses. Is there anything that is lacking in the current ecosystem?
So if I want to single out the most important feature, it's alignment of interest. So obviously you need the capability, you need a comprehensive team, because you need not a single founder feature. There are a number of factors, so everything that Zeynep and Frank highlighted needs to be there. Probably it needs to be on a wider team, might have some gaps that we can fill, but needs to be a proven team, proven product, because we come at a slightly later stage where it's providing the growth capital. But singling one point that would really drive the journey into a successful outcome or not, it's alignment of interest. Because usually we take the businesses through to the exit zone, and usually it includes significant growth that is either M&A or expanding products or expanding into a new market, and we help because we're a sector-focused investor through value-add levers. But at the end of the day, we are backing the founders and backing the management team. So if the alignment of interest is not there in terms of the final destination, how are we going to get there? Is it market expansion? Is it different? Is it M&A? If this is not check, the journey will not be pleasant for neither the investor nor the founder, really.
I love that. The journey will not be pleasant.
Yes.
We do want a pleasant journey, and I'm sure all of us have had some unpleasant journeys in our way. Zeynep, you, Plus VC is a connector fund.
Yeah.
How do you arrange those connections around your founders? How do you work out what they need, and then what do you put in place for them?
Great. So just to recap, so because we invest in early stage, and our ticket size is very small, so we invest in a pool of 100 to 120 startups, and we put in $100,000 on first checks. So it's a very small check. It's not about the funding, it's about the strategic value. Although we don't take board seats, we still add that strategic value to those founders. And how we do that is that, first of all, when we speak to those founders and we invest, we onboard them and we let them know about all the perks and value add that we would offer. So we identify what they're struggling with. Usually they would know the product best, but they would struggle in areas such as marketing, legal, financial, so we connect them with the right mentors to help them with that. Our goal is to help those companies grow, right? And then we have open office hours with the team whereby they can get market insight, they can speak. Sometimes I even become the therapist to those founders. That's one thing. And then second is that we partner with different tech tools such as AWS, Microsoft, HubSpot, because we want to help founders keep costs low in their earlier days. So with those tech tools, they would offer different discounts. And at the same time, the nice thing is that we cross-sell existing portfolio companies to each other. So whether it's in HR, it's in CRM, whatever it is, these portfolio companies would offer discounts to each other, and we put it in a plus perks document. And then obviously on a quarterly basis, we have those catch-ups with the companies and we get their updates and ask them what we could help with. So sometimes it's hiring, fundraising. And then you have the second part of it is we build a community for these founders. It's very important because we believe that there could be potential synergies among those founders with each other. So we have a community whereby we put all the founders together, and it's very active, like you'll see it. Someone would write in the group, does anyone have a translated version of a safe note in Arabic? Another founder would send it. And they would say, do you know a lawyer that knows in how to convert from a safe to an equity? They would find. So they would share, and they would always identify potential synergies together. And we host different dinners and we bring them together. Not only them, but also different stakeholders, because we don't compete with other VCs. We actually collaborate. So we have recurring calls to exchange deals based on their mandate, and we would introduce those companies to those investors. And then we have LPs as well. So by informing the LPs and sharing with them the deals that we invest on a monthly basis, so we share that on a monthly basis. You have some of the LPs which come from family offices who have similar verticals or business lines to the company. So by connecting them, if it's not an investment, it could be a potential partnership or a client. So we try to identify those gaps and bring everyone in one place.
Community and partnership.
Exactly.
It is, yeah, it's so important.
Yeah.
Frank, speaking of partnerships,
Yeah.
the big tech companies, the big corporates can be a blessing, can be a curse. Proof of concept can be that early blessing, getting that first big client, working out the product, but equally, enterprise sales cycles, very difficult, especially with cash flow issues. How should founders be approaching this?
Yeah, I should say I'm ex-Microsoft for 21 years, just to clarify why I'm being asked the question. But just to support Zainab's point, it takes an ecosystem to rate a startup, right? So we all try to work together, and that's the same with the big tech, right? So Amazon, Google, Microsoft, whoever, they have lots of programs to help startups, and that's the blessing. I think on the sort of other side of that, you need to think about your competitiveness within the market as a startup and your relevance, and it's a kind of one buyer problem, right? We think about things from an exit point of view, and from going into an investment, we go in straight with an exit strategy, and sometimes a corporate too early is not a good thing in the sense that you're locked into one strategy as opposed to being able to access the whole global marketplace. So you need to think very carefully about who you partner with and how early you partner with them. And then the other curse, I guess, is of a single corporate, not a tech company, is just having a one buyer problem, right? Where you're partnered with one company, and then there's no they're consuming all of your time, and you're not having any time for anybody else. So just think about those things and timing when you're developing your own strategies.
Yeah, I think it's a very interesting place that we're all in that there are these really established big players, and often we're investing in the disruptors, which have the ability to have huge growth. When I look at things like Swift, for example, and Hossam, we're very much investing in the challengers to that big machine. Swift's inefficiencies have previously been very beneficial for us and our portfolio companies, but now apparently it's about to get a lot more efficient, and that could have a detrimental effect on our IRR and our fund success. So how are you thinking about that?
Sure. So we'll cover the macro and then the micro specific about Swift. So I think part of our core pillars of our strategy is the tech enablement and how it's democratizing financial services. And we've seen this in lending, we've seen this in payments, of course, and in insurance and businesses we invested in Africa, like Time Bank, for anyone familiar with the Southern Africa or South Africa digital banking environment, has been hugely successful in South Africa and now expanded to Southeast Asia with the presence in the Philippines. We have a series of successful stories in payments and in lending. So M&T Halan out of Egypt, where basically it is really democratizing access to lending, becoming the largest financial services provider for the unbanked in Egypt and expanded to Turkey, UAE, and Pakistan. So all these stories are centered around using technology to facilitate the enablement or enable the availability of financial services products through better access, cheaper cost to consumers who would get it probably more expensive or not be able to get these products. And that's not an Africa issue, not an emerging market issue. So our recent investment in the UK is a business called Moneybox, if any of you have seen the ads, they're popular in the UK. And this is democratizing investments, where basically people who want to invest 10 or 20,000 pounds can get access to products that would have only been available for people investing £250,000. So SWIFT, or cross-border money transfer, has been one of the financial services frontiers that has been very difficult to disrupt and very difficult to actually make it efficient. We all had kind of like, and even at the more kind of like higher tranche of the pyramid, it's still expensive, of course. If you think of kind of informal workers across borders and the Hawala system and how much does it cost for someone working in the GCC transferring in South Asia, it's like super expensive to actually transfer value cross-border. And this has been, despite all the technology we've seen, it's still one of the last frontiers to be disrupted. So SWIFT, which is the dominant player that is connecting all the banks, now they're trying to blockchain their infrastructure, which can be a very positive evolution. So if this actually completes, it can be a more efficient, safer, better way to transfer money, and this will accelerate growth across Africa and other markets.
Yeah.
Where we are investors is actually two businesses that are doing the same value proposition, not necessarily maybe competing with SWIFT, maybe expanding the pie. But one of them is a business called DT1 that is using the MNO connectivity, the mobile operators, to transfer airtime across countries. And the other one, which is more or less relevant and potentially competition, is Tunes, where basically it's a digital infrastructure connecting a number of countries, and big portion of the business actually is in and out transfer flows in Africa, serving SMEs predominantly, that transferring through bank can be very inefficient, to transfer value across geographies in a safe, KYC compliant, legal manner at a much, much lower cost. And they're also assessing blockchain infrastructure.
Fantastic. Yeah. So when we look at individual company success, I mean, I'm a VC, I'm biased, but VCs are very important. And what we've seen is a huge slowdown in funding to VCs. Angelique, Blue Earth is playing hopefully a pivotal role in, in changing that. No pressure, of course. But how are you doing that, and how are you hopefully trying to accelerate some growth at the VC level, which can then trickle down?
Yeah, happy to take that question. So Blue Earth is an impact investor, and we always had like this impact thesis of, bringing new, fresh capital to the market, and it's only, impact if it's additional. But we also realize that, the secondary market is really important. If you don't have liquidity in the market, if there's no exit possibility, it does just create a barrier for new investors that, might be interested in Africa but just can't get there because they don't know whether they're going to actually get their capital back in 10 + 1 + 1. So, us coming in, we try to play a role in like shaping that market and making it more liquid by replacing investors in existing funds, but also like offering the possibility to GPs to kind of create continuation vehicles for the winning assets that are doing well but might, for whatever reason, not have an exit market at the moment, or the GP decides that there is actually quite a bit of a growth journey to still go on for the next 3 to 5 years that we don't want to miss out on. So maybe like on the VC side, this is what we can offer. Like, you know, as a VC fund manager, if you have assets that are doing really well and you don't want to let go of them right now, but you're coming to the end of your fund life, then let's have a discussion and see, you know, if we can put that into a continuation vehicle.
Yeah, absolutely. It's so important. Hossam, does it work?
So
Does it make it easier for you?
yeah, look, basically, look, it's
So for context, Blue Earth, you've done this with APIS.
yeah, like it's basically Blue Earth is a very good LP of in our fund, and we have kind of a deep relationship looking at co-invest and potential secondary opportunities together. And this is a massive facilitation for driving outcome in growth markets. The biggest challenge that Africa is facing when it comes to investing, so if you want to swing, like refocus into accelerating growth across Africa, accelerating growth requires capital provision. And capital availability for Africa is significantly less than other regions of the same scale in terms of opportunity, in terms of population, in terms of number of venture businesses emerging. Big part of this is that we have not, as Africans and people involved in African businesses, we have not delivered the returns and the exits. And it become a bit of a self-fulfilling prophecy, because if there is no capital, there are no exits, and there are no exits, it's very difficult to attract capital beyond BFIs or impact. And changing and breaking the cycle is a challenge that we're facing across all our markets within Africa, that of course having players providing capital break this, and being able to deliver exits, which is something that we have done with a combination of luck and planning, I think helps kind of like change this narrative that Africa has not delivered to its potential.
Yeah.
The other challenge is Africa is not one market.
Absolutely.
Yeah, and that's a big problem that we can capture later if you wish.
That is a big conversation. But just staying with impact, because when we're thinking about pools of capital, impact capital was something that a couple of years ago was very prevalent, and impact was a big theme. And in the last year or so, protectionism has become so much more so. And I think about AFSIC a couple of years ago when there were so many panels on ESG, and correct me if I'm wrong, but I don't think we've got one this year. So, I thought someone was going to correct me. But, so Angelique, for you, impact is at the core of what you do.
Yes.
I'd love to hear from you how you see impact, from that being an impact investor, how you see impact and commercial success intersecting, and then Frank, from you, where you see commercial first, impact second intersecting as well. And then we'll go to Q&A.
That is our mandate. That's at the core of what we do. We do want to, you know, support companies, fund managers that have like a positive societal or like climate-related impact. So on the societal side, that can be education, affordable housing, healthcare, financial inclusion. And we can see that it does work, you know. So with APIS Partners, we have a co-investment in a South African digital bank. Well, it's not only South Africa now, it actually expanded to the Philippines and is going into Indonesia. And their model is really like catering to, you know, I don't like the term bottom of the pyramid, but everyone understands what I'm talking about. And then, you know, they can actually serve these people in a profitable way. And this is like where the mass is, the volume is. And that just makes commercial sense.
Yeah.
Yeah.
Absolutely. The scale, right? Frank?
Yeah, I mean, I would argue venture capital by its very nature is impact. Right?
Yeah.
Because it's venture and you're taking a risk. And you know, I think one of the issues with Africa, from perception point of view, is that we have to get rid of all the risk. But there is risk. There's risk in any venture, right? There's risk all over the world. And as you know, as we're seeing right now, there's a lot of geopolitical risks, there's other risks, and that are shocking the system, right? So if we're investing in venture, we are having an impact. But we also look at it from a point of view from Africa Bridge. We are doing profit first and impact as part of what we're going to be doing, right? So we need to make a profit to be able to have an impact. So we do believe in impact investing, don't get me wrong, it's more the order of play. But from a venture point of view, you have to acknowledge that some things are going to fail, right? So you are taking a risk, and that is an impact. You're taking that risk, whereas other people are not taking that risk.
Yeah.
Further up the kind of finance stack. So there's early stage right through to PE, and they're all different. So yeah, that's how we look at it.
Absolutely. I think it's really interesting what you said about profit creates impact and commercial success really creates it. We really believe that impact happens when you allow communities to build for themselves and create those successful businesses that stay. And when we see things like USAID that had such great impact but is so tenuous and can just be taken away in an instant, actually that becomes not sustainable. Okay, so we'll go to questions from the floor, please. Wonderful. Do we have someone coming? Someone is going to come to
one here.
We've got one here.
Yeah, here we go. Pass the mic. Please let us know your name, your organization, and your question, and if it is for a particular panel member.
Yes. Hi, everyone. My name is Nicole, and I work at a company called Bubble, where we focus on I run our accelerator program where we focus on product development and helping founders really nail like their first MVPs. And so my question was around, like to your point about risk, there are many risks, and one of them is product risk. And so I'm curious how you work, and maybe, Zainab, maybe this might be more towards you because you talked a lot about early stage and early concept founders, and you bring a lot of support around them. And so I'm wondering, how do you make sure they're building the right product in a place that already has a lot of other dynamic sort of challenges going on? Particularly when there was another panel that talked about this, where in Africa, and a lot of parts of Africa, in ecosystems where are underdeveloped, it's difficult sometimes for founders to see an example in front of them and be able to lead. Oftentimes, they're the ones leading and creating the path. And so there ends up being a doubling down on support when it comes to product development. So I'm curious, how do you make sure they're building the right thing and really getting that customer discovery piece right?
Yeah, of course. So I'll give you an example. It's obviously the team. You want to see founders that are coachable and not arrogant, and listen to your advice. So the most successful founders that have shown or proven growth over time, especially the ones that I've seen at an early stage, now they're worth $1 billion valuation. Let's say we invested at a 1.2 million, now they're worth $1 billion. The reason for that, and it's just a basic product, like it could just be a meal plan platform. It's nothing new. There will always be competition. There is always going to be challenges. It's about the founder. How can the founder develop a product, especially at an early stage, is literally pick up the phone, speak to every single customer, get feedback, back and forth. Always develop the product based on the customer, not based on, don't be biased and put yourself as the customer. You're not the customer. You're going to have multiple types of customers with different preferences. Always speak to them, always get their feedback, always develop. When you go into a new market as well, there are going to be different types of customers. Do the same thing as long as you're willing to accept the feedback you get from the customers, because you're in the development phase. You want to always make sure that you're developing the product, that it's fit enough for you to go to the bigger markets and compete. So you have a lot of companies that start in smaller markets to test the product, and it's fine. You can experiment as well. You can try new things, try new revenue streams, see how it works out, get the feedback for you to develop and kind of perfect the product and be ready enough for you to expand into new markets. So speaking to the customers and always accepting their feedback is key.
Are you helping them do that per se? Because it's a skill, right? To be able to understand that what a user says they need versus what they actually do in a product, right? Are two different things, right? So are you guys like actually helping them do that?
So we give them advice. We don't take board seats. We don't push them, but that's the reason why we invest in them. So we invest in 2% of what we look at per year. So we reviewed over 5,000 deals in the last 2 years. We've invested in 100 of that. So we invest in 2% because we identify these founders at an early stage that are capable of executing. We do different observations. I'll give you an example. If you have a founder on an investment call that we speak to and their co-founder is on the call, the team is very important at that stage. If I ask a technical question, I would expect the CTO to answer, not the CEO. If the CEO always interrupts the CTO, that's a red flag for me. There's an internal conflict in the team itself. So the first thing I would try to understand is, do they actually complement each other and work well together or not? And then, obviously, like, we will identify stuff in the product whereby we'll test the product and we'll give them feedback. Is this founder coachable or not? My rationale is mainly on the team and how the team executes in the end of the day. I'm not going to go tell them the person I'm investing in should know the product best, right? Better than I do. So I'm investing in the person that's capable to execute that.
Okay, next question. No, whoa, yeah, there's always yes.
Hello. Robert Hornsby, Jobomax. We are a home builder and housing finance company mostly serving the diaspora. I want to follow up on this last point you were talking about on impact. And your impact is, it's like pornography, right? It's hard to define, but some people know it when they see it, right? When you talk about seeing impact as empowering communities, I'm not going to get exactly what you said, right, but empowering communities sort of build things out themselves. We look at the diaspora as sort of the thin wedge of that kind of impact, in the sense that if we can give them a way to have a safe place back home, they can then use that as a launching point to do other things in the community. How does diaspora engagement factor into the way you look at investment opportunities on the continent?
Anyone feel a burning desire to take that question? I'm happy to.
Yeah, look, I think it's from the diaspora point of view, it's a very important value driver for any thesis around Africa. So, for example, in Egypt, where I come from today, the foreign currency that comes to the country from expatriates working outside of Egypt is it's double what Egypt makes from Suez Canal and tourism combined. Like, it's double this amount. And this is the case in Nigeria, it's the case in most of maybe South Africa is slightly different because it's a slightly different market structure. So diaspora is part of the thesis. It's not the only thesis. I think the main thesis across most of the markets is the young population, diversified economies, underserved, digitalization that is helping basically having this above normal growth rates. And diaspora is playing a role. Of course, your thesis is centered around offering a product that is diaspora linked, which is very sensible. But I think if you look at it from macro to most of Africa, it's one element among a few others, yeah.
I can also answer that. So we have a small allocation of the fund for diaspora deals. So we have 4 companies here in the UK with MENA founders and 4 companies in the US as well with MENA founders. I think the impact there is, it's a win-win situation, because first of all, with those companies that we invest internationally with the diaspora founders, we get access to their co-investors, which are international investors. And then by building that relationship with US or UK investors, we're able to exchange deal flow for them to look at other opportunities in our region. That's one. The second thing is, when we speak to investors in our region and tell them about companies, so for example, there's a company in the US called Hoop, which is backed by a MENA founder. It's a smart basketball hoop based in the US. So by introducing them to other investors in the region, so the Qatar Development Bank, for example, invested in them, but with an exception of them being the distribution hub and start selling for the MENA region. So it's a win-win situation in the end of the day.
Okay, another question. God, anything you've been wondering or something you didn't agree with maybe? Yes, go for it.
Yeah, you can hear me, it's fine.
Yeah.
Oh, but they need to hear you. We need real context. Wonderful. Here we go, a mic's coming for you.
Good morning, thank you so much. My name's Abdullah. I'm a transitioning doctor into an entrepreneur, so I'm trying to gain as much as I can from those experiences. I just was really interested when you said how Africa in general as a continent should not be considered as one market. And I was wondering if there's any relevance to this specific topic in accelerating growth across Africa.
Yes.
And how you can maybe filter those varieties that you see in the market in this specific topic so it stays relevant.
Thank you, Abdullah. Yes, it does, because of 2 elements. Number one is, two reasons. So I look after Africa and India. So I see 2 markets that are kind of, well, debatable, but which one is bigger in terms of population. But one of them is one regulator, one infrastructure, very advanced digital infrastructure, very active capital market, a lot of local money, a lot of interest from foreign investors, delivery on exits, difficult regulatory environment. There are a lot of challenges, very expensive market, lots of challenges, but it is one market, heavily integrated, very digital. And this creates the opportunity for scale transactions and for exits to be delivered. In Africa, we have the opposite. We have 54 countries that are not integrated, neither digitally nor physically. It's very difficult to travel from one country to another. It's a lot easier to kind of like focus on parts or corridors or sections. And we're very behind in terms of the digital infrastructure as well among the African countries. And of course, this is resulting into a more challenging environment to have a definition of a single market. So if you're a business, you're capped by a fish cannot be bigger than the fishbowl. So if you're a Tanzanian business, very difficult to articulate the Moroccan thesis. Yeah, if you're in India and you're in Pune, you can expand into Delhi. It doesn't matter. It's one region. So it impacts how big is this fishbowl. And the second element is impacts the exit thesis. And because we're not delivering as many exits in Africa, as many billion-dollar, African billion-dollar businesses have the hobby of not staying at a billion. So in India, they do, and they double. So yeah, for these two outcomes, it would be good to, if it's more integrated and more one market, it will be a bigger opportunity for everyone.
Brilliant, thank you. Okay, well, we are at the end of our panel. We're going to finish with a quick fire. Let's say we reconvene here in 2 years' time. What would you love to be seeing that's different from today? I'll start. I would love to stop, or maybe get a little bit less, the questions from potential LPs of, but there's no liquidity in Africa. And I know that we and Blue Earth and APIS as well, and lots of other funds, we are just on the precipice of really creating that secondary liquidity market. I would love for that to be a thing, actually. We've seen liquidity in Africa. What's next? Angelique?
I think you took my point, yeah.
Oh, sorry. Well, at least we're aligned.
Yes, I would love to see, quick anecdote. In my former life, I was working for Partners Group, large developed market, secondary team as well. We needed to pre-value funds that might come onto the market because we get like a deadline of 1 week to kind of price, like several funds of an LP that's interested. I want to be like pre-valuing the funds and African GPs, like when they come on the market, I can go because there's so much competition around bringing liquidity to the investors. That would be great.
That would be great. Zainab?
I think connecting between the MENA market and the African market in terms of the African market has access to a pool of talent. There's a consumer market there, and then the MENA region, there is that capital. So connecting them together and starting to build that awareness for the potential of those markets to collaborate with each other.
Fantastic. Hossam?
I already spent some time on the challenges, so but it would be good to see more of the same. There's a lot of innovation. There's a lot of it's not easy to start a business. Venture is risky, but there's a lot. There is a lot of talent, and seeing more of the same would be great. So.
More. And Frank, finally from you.
Yeah, I'd like to see some of the global players in the room, and I'd like to, Africa has that potential, and we have to invest now for the future, and it needs to be a global player, and I'd like to be that.
Absolutely. I love that. Fantastic. Well, thank you very much, and thank you for listening, and I'll see you on questions.